Most traders get structure wrong. I'm going to show you how to read it properly in this video today, and I'll show you where potentially you are reading it wrong. First, let's look at exactly why and how potentially you're reading your structure wrong. But if by the end of this video that you've got that clarity, but you still want more help when it comes to your market structures, then do check out the 90-day fix program, because we're currently now opening up applications from today for a few more to enroll this month. And the link for that is in the description of this video. So we're on the 4-hour time frame here of the Great British Pound US dollar pair. I've put it onto a replay mode just to show you exactly where many of you are marking your structures incorrectly. So you may see this move up, okay, this strong move to the upside. As price makes the pullback here, what we can start to identify is reading these wicks in the market. We can start to see where price is making a low. Okay, we continue to pull back. And what you're potentially looking for is price to break that previous structure high. So you're seeing price making a pullback. You're looking for a break of structure here to continue to buy and continuation of this trend, where you're potentially reading the structure incorrectly, and I'll show you why. Let's walk through this step by step. And then we'll go through exactly the way I read structure on a mechanical approach, the step-by-step process that I use with a candle-by-candle approach, how to find a real true break of structure and a valid trading high and valid trading low for your trading range to take a trade from. So what you're potentially doing is looking at price here, looking for potential break to the upside to give you that confirmation to go higher. Now the market is just closed through that level. What does that now give us? That will give us an area here of potential, let's say, demand that you can look for an entry to go long from. So let's say you've seen this move to the upside, we broke out, you're looking for a pullback into this area and looking for another run to the upside. Let's say you're looking for 3R on this trade, and you look to be entered into this trade before the market runs higher. Now, even if you didn't see this as a break, this first break, you can definitely see a nice break to the upside on that candlestick there. Looking for that pullback now into your area for a buy. We've been triggered into the trade, and now you expect to see price at least from here to run, take this high, and continue up for full target. Let's just play this forward and see what actually happens. And look what happens. Price moves sideways, never runs higher, and you're stopped out. That's potentially you reading that structure wrong. So where did you go wrong with this structure? Why did this happen? Let's back it off again. Let's actually remove everything off here. We're at that same area of price again. Now, the big mistake you made was thinking this is your major structure break for continuation bullish. That is not your major structure. This is just your internal structure. Look, when the market broke here to the upside, that is a valid break of structure here, bullish. And mark this off as a bullish break of structure. Once we get to this area, this becomes a valid high. I'll go through exactly why, but your valid low is still down here. What does that tell us? That tells us that we have an area of demand down here where price could still react from. And it also tells me that to be looking to buy on the break of this move is internal liquidity structure, not taking it from a break of structure at a previous high. That's why when we fast forward price again, we hold at this high, just sweeping through, reversal, closing down, looking for continuation potentially lower. Because price is failing to take out your swing structure, and you've only seen an internal shift to the upside to take liquidity before the true run. So we just follow price down. We get to this area. Instantly, we see the sweep of the low. That's taken the area of demand out. And it's also shown me that the market's most likely from this strong move down to take this low. Now, we can still hold at this area, but you've now not taken a trade here, thinking this is a break of structure. Yes, it's showing you a break of structure on an internal structure, but this is the area you're looking for a buy from down here, not up here. You're trying to catch a trade too early. You're misreading the structure totally. Now, how can we make this more mechanical for you? How do we mark it up? I've just shown you here. Well, quite simply, we use a candle by candle approach. Let's zoom into this area of price. Let's change it to, let's say, here somewhere. So once we see this candle closing through this level, that is your valid breaker structure. We have to see that candle body close. Then we look back and we're looking for the last candle to close down. That's a valid close below a previous candle's low. It must be the previous candle, nothing else. So this candle must close this candle's low. We do that, we break out, that is your valid low in the market. Now for a valid high, we're looking for the same sequence. We're looking for a candle to close down. Let's go forward. At the moment, we don't have a valid close down. Still no close down. And we continue with a candle by candle approach here. And obviously in live markets, let's say you're trading a 4-hour time frame. You've got 4 hours to wait every time. Now we identify that candle's closed down. Now it doesn't matter if you're doing this on a 4-hour, you're doing this all the way down to 1 minute. It's exactly the same process. So now we have a valid close down. Our valid high is the highest point, not here, but this previous high. That now gives you what we class a trading range from this high to this low. And that's where you'll start marking up your areas of demand. We have the area of demand we marked up. So that's how you would look for this. So to look for any reversals here, you're looking for price to come down towards your area of demand to run back for that high. And that doesn't happen. Instead, what you actually see, let's go forward a bit, is we're looking at price breaking a previous high internally. So we're coming to this previous high and then the next candle breaks up. Now all it's doing now is breaking up to retest this swing high, your actual trading range high. We've swept that high, and a reversal out from this high very often indicates the market will run lower. And if we go forward from here, that's exactly what the market does do. And it runs for this low. So to avoid these mistakes going forward, you need to start reading the true trading range that you're within. Not looking at a breaker structure internally like this. You want to wait for the swing breaker structure to confirm that breaker structure bullish, then look for pullback again to your area of demand or supply when you're looking to sell. Now internally it works, but only at the correct location. And that's exactly what we do teach inside that 90-day fix program. So from here, we can expect price to pull back and eventually break lower. Now I know this ahead of time because obviously we've seen this happen, but this is where you now have a valid breaker structure. This is not a valid breaker structure because this is not valid. It's internal liquidity breaker structure. This is just a sweep of this high internally to take the high as liquidity, and then we run lower. Now this candle, and mark it off for you, this candle does confirm a break of structure. And now we can look back from this breakout point and this becomes your valid high. And what you now have is a valid area of supply where you can look for price to pull back into. So once price pulls back on this bullish candle, that gives you a valid low. Now again, we haven't broken structure here. We also have a valid area of supply still above. Let's go forward price again. Let's see what we go. Right, so we've now made a valid break to downside. And again, we then mark out our new high, which is going to be here. Now this time, we have a nice area of supply here. We also have a valid low that we can mark off right here. Now what I can now potentially look at doing is looking for sell from this area, because now we have a true trading range from, okay, where from? Let's grab the tool, from this high to this low. Previously, we were this high, okay, to this low. And then before that, okay, we had it from this high, we broke out down here. This became a new trading range. This was your bullish range. This became the new trading range to downside. Now, this is dynamic. It moves with price. So instead of just marking off the high to the low, That's not how we're going to do this mechanical structure. So let's just see now if this trade works out. We're looking for price to pull back. We don't. We continue bearish. So again, what do we have? A valid break of structure now to downside. Okay, so the market has made a single pullback here and a new break of structure. Now this does give you a new area here. Not as good of a zone. This, to me, we still have fresh above. But that's not what this video is about. It's about structure. And you should see the price to local price. So that is how you'll start looking at marking that structure correctly. Now, if we drop down to a 30-minute here, the same can be said when we're looking at the 30-minute. Price here pulls back. New break of structure bullish. Okay, we're not looking to buy this because we're bearish on that higher time frame. So the major swing here, this is your major swing. There's your pullback continuation. So if you're looking to buy these pullbacks, if you're looking to buy on these breakouts, that's where you're going to get stopped out every time. Okay, every time you break out, eventually the market's going to reverse against you. So wait for the internal to shift bearish. Then you can look to take your trades. Before we wrap up, if you're tired of second guessing trades or still wondering why structure isn't clicking, this might help. I built a full 90-day system that turns structure into something you can actually trust, not just theory. It's what helped Danny rebuild after losing nearly 300,000. He didn't just learn structure, he finally knew what to do with it. If that sounds like where you want to get to, the link is in the description. Apply for access when you're ready. Now, if you do want to find how you can apply the 2 time frame approach with this type of trading, do check out this video coming up next. It's going to help you understand how we apply 2 time frames with this market structure.